Good evening. Thanks for joining us on India Business Hour. I'm Shireen Bhan, and here's wishing all our viewers a very happy Diwali. Markets end somewhat 2078 on a positive note after a volatile session. The Nifty is down over 1% since last Diwali, but it's outperformed most of its peers. The mid-cap index lost just over 1%, but the small-cap index down over 12%. Telecom and retail businesses deliver a strong second quarter for Reliance Industries. Jio reports margins above 50%, revenue growth above 20% for the third straight quarter. Hindustan Unilever delivers a mixed bag. Revenue and volumes largely in line with estimates, but inflation eats into margins even as lower tax outgo boosts profits. Boris Johnson and Rishi Sunak are leading the race to become the next Prime Minister of the UK. A new poll shows support for the Conservatives among the British public is down to 14%, which is the lowest in polling history. Ukraine's President Zelensky warns that Russia is planning to attack a hydroelectric dam in Kherson, which can cause serious flooding in the region. The US claims Iran is directly engaged in the war by providing drones and technical support to Russian pilots to bomb civilian targets. As he attempts to gather funds for a $44 billion acquisition of Twitter, Elon Musk has told prospective investors that he plans to cut 75% of Twitter's workforce, according to the Washington Post. But Twitter's management circulates an internal memo among employees saying there are no plans for any company-wide layoffs. And will this Diwali bring cheer for the retail industry? We take stock of the mood across the key business districts in Delhi and Mumbai. Well, let's start with the market action. It has been a positive close for somewhat 2078. The Sensex and the Nifty finally closing in the green after a fairly volatile session. But it's also been a solid week for the stock markets, with both the Sensex and the Nifty gaining over 2%, which is the biggest weekly rally that we've seen in the last 3 months. For the year, that is somewhat to somewhat. The Nifty is down 1%, the mid-cap index is down over 1%. The small-cap index is, however, down over 12%. Nigel D'Souza standing by with the market performance from last Diwali to date. Nigel.
You know, a lot of things got thrown at us, whether it was COVID, the post-COVID impact as well, particularly in China, whether it was the hawkish Fed, the Reserve Bank of India as well was hiking rates. The Russia-Ukraine war, that's what put pressure on inflation. Globally, you saw inflation prices that spiked up, crude oil prices up by close to around 20%, all this in the, in the last year or so. And high inflation scenario, still, in fact, the Nifty managed to hold on. Well, supply side issues as well was another worry. And the FIs, as we were just discussing, well, they sold close to around $30 billion, and yet the Nifty didn't fall apart. That's telling you the kind of participation we had from the retail audience as well out here. And in the currency market, well, there was a relative outperformance out there because the rupee depreciated, yes, by around 10%, but the dollar index itself moved from around 95 all the way to around 114 or so. And if you compare India with the rest of the globe, the US markets were under pressure, the European markets as well were under pressure. They were down anything between 5 to around 20%. And even some of those, other Asian markets, they saw a lot of pressure, barring, the Latin market. The Brazilian index was a relative outperformer, and the Nifty as well was a close second, with being more or less flattish in the last 1 year or so. Within India, FMCG did very well, auto sector as well did very well, in the last 1 year. And the PSU banking names, they were something that did pretty well. IT did see some pressure points, and the small cap index as well was down. Let's run you through some of those big movers then on the Nifty itself. New entrant, you had, a couple of those names in there. But first, the losers. Some of those stocks from the IT pack, well, they were under pressure. You had Divi's Laboratory as well that was under pressure. And in fact, the commodity-related names, whether it was a BPCL in there, Tata Steel, Ultratech, all of them did see some selling. And HDFC Life, a distinct underperformer out there. But some big gainers, Adani Enterprises, well, it's made its way into the Nifty, and that's given you big returns. And just take a look at the screen. Some of those rare entities, Coal India, Power Grid, as well as NTPC, PSUs in there, that were relative outperformers. I don't remember the last time that happened. The Royal Enfield as well from the Auto Pack did pretty well. But there were some losers, and they are all up for you on the screen. Some of them seem to have lost their way. Godrej Properties, you had Indiabulls Housing Finance, IEX, India Mart, some of these stocks, well, they ran away a goodish bit, and then they came in for some profit taking. But let's wind this down with some of those big gainers. HAL out of nowhere, the defense play, TVS Motors as well continues to run ahead, and a couple of those PSU banking names in there as well, up and about in the last 1 year or so. But guys, it's still a happy Diwali because despite all the challenges that we had, the Nifty was still more or less flattish. Back to you guys.
Nigel, many thanks and wish you a very happy Diwali. That's Samvat to Samvat, the market report card for you. But the big earnings today, Reliance Industries reporting its second quarter numbers. Our research team is here to break the numbers down for us. Sonia, let me start with you for the overall numbers as well as the performance coming in from Jio.
Well, thanks a lot for that. You know, it was a mixed bag this time around. So very strong consumer-facing businesses, both Jio and retail had a good showing this time. But there was weakness definitely in the oil to chemical segment. But the consumer-facing businesses now contribute about 50% to the overall EBITDA. So in that context, it was not such a bad showing at all. The consolidated revenues came in at 2.3 lakh crores versus 2.1 lakh crores same last quarter. The EBITDA has fallen to 31,224 crores versus 37,997 crores, largely because of the weakness in the oil to chemical segment. The EBITDA margins as well have fallen to about 13.6%, and the consolidated net profits were down about 24% quarter-on-quarter. But Rel Jio had a good showing this time. The revenue growth came in above 20% year-on-year, and the margins came in above 50% for the third consecutive quarter. Even the average revenue per user has been increasing for 6 straight quarters now, and the total subscribers went up by about 1.8% compared to last quarter. In fact, if you look at Reliance Retail as well, Mangalam will tell us more about that. But all in all, a good showing coming in from the consumer-facing businesses. Mangalam, over to you.
Good showing coming in from the consumer-facing businesses, and retail was a testament to that. It was an extremely strong quarter. The street was expecting a good quarter. The company delivered a better quarter. We saw an 11% growth in the retail revenue, just shy of that 65,000 crore mark on the top line for this quarter, and that makes it a record revenue quarter. And not just the revenue, in fact, we saw an EBITDA growth of almost 14.5% also. Margins improved by about 20 basis points quarter on quarter, and on that base, that accounts for a lot. Both the revenue as well as the operational performance was above what analysts were expecting. Nomura's estimate on the revenue was 62,000 crores, and on that of their EBIT was 4,200 odd crores. That's not all. The company added close to around 800 stores during the quarter. The footfalls were much higher than quarter one and also 23% higher than pre-COVID levels. All the other things doing extremely well for them. So that's about the consumer-facing businesses. Not too sure about the way oil to chemicals perform though, Sonal.
Yes, can't say the same for oil to chemicals business. But you know, Mangalam, this was largely expected this time around because of the shutdowns that the company took, the maintenance shutdowns, that is. There was a windfall tax impact as well, and also the energy markets were quite volatile. So this time around, for oil to chemicals business, it is a revenue decline of 1.2%. EBITDA was down 40% in line with estimates, leading to a margin decline of 500 basis points. The company says production was lower due to planned turnaround of primary and secondary SEZ refinery units. Polymer margins declined between 6 to 32%, and that is largely because of the spreads coming down as well. Lower demand in China led to decline in product prices as well. So all in all, they saw an impact because of windfall taxes, shut down in their refineries, and lower product prices as well. But on the flip side, if we talk about the oil and gas business, that did really well, much better than what the street was working with. Revenue growth of 6.2% on a quarter-on-quarter basis. Margins, they expanded 700 basis points. And a company says from the third cluster in the KG-D6 basin, the production will commence by the end of this year. Then Reliance will contribute 30% of the total India's gas production. So it looks good as far as the oil and gas business is concerned. But oil to chemicals business, weakness as expected. But that's about the oil to chemicals and oil and gas business. With that, Shireen, it's back to you.
Well, that's Reliance. And staying with earnings, Hindustan Unilever has delivered a mixed bag. Revenue and volumes largely in line with estimates, but high inflation has hit margins. Shilpa joins us now with the breakup. Shilpa, take us through the numbers as well as the management's commentary.
Well, HUL reported revenues at a 4% volume growth in line with expectations, but there was a mild miss on profits and margins, and this was because of inflation. Now, the company did indicate, while that there has been some softening in crude prices, overall commodity inflation is still significantly elevated, especially prices of other raw materials like sugar, cereals, etc., and a strengthening US dollars only adding to this. Now, from a category point of view, home care outperformed this quarter. Beauty and personal care saw moderate 11% 8% growth, but a slowdown in foods and refreshments category, which saw only about a 4% growth. Now, HUL's top brass said that the company continues to be cautiously optimism. Now, the cautiousness comes from a continued rural slowdown and inflation that's impacting volumes, but the company has outperformed the market, which is still seeing negative volumes. But September, it says, has been a particularly good month, and that's where HUL says the optimism comes from. And with the current quarter also being the festive season, the company will also be stepping up its advertising and promotion spends. Now, we spoke to Sanjeev Mehta and Ritesh Tiwari earlier in the day on inflation and the outlook. Listen in.
Once there are very clear evidence of the commodity prices softening, and we as manufacturers, producers and brand owners will correct the price value equation by giving more value to the consumer. That is the time when the volume you should start seeing. But during this period, like Ritesh has rightly said, the growth is going to be price-led.
Well, that's Sanjeev Mehta of HUL. From one FMCG company to another, ITC reported its numbers late last night. Second quarter numbers were higher than street estimates, with revenue growth in double digits across all segments. The hotel and cigarettes business led the growth. The company's standalone profit was up nearly 21% year-on-year. EBITDA was up nearly 40% compared with the previous year. Real estate player DLF has recorded a 26% jump in net profit, while margin has expanded to 33.5%, but revenue and EBITDA have fallen year-on-year. Meanwhile, the board has approved a fundraise of up to 1,500 crore rupees. We will head into a break, but on the other side, Boris Johnson and Rishi Sunak are leading the race to become the next Prime Minister of the UK. That and more when we return.